Things just keep getting worse for Uber. Hey everyone, this is Kevin the Apptrepreneur. Welcome to my channel, and let's finish this off. I promised my viewers I would do a 3-part series on Uber and basically their financial troubles and where they may be heading. Now, in some ways, I am repeating myself for the last few years, but the chickens may finally be coming home to roost. Now, some of this is a little old because, if you've been watching my channel, I kind of got sidestepped with some things. So this kind of got put on the back burner, but let's finish it off. And I'm also kind of glad it took a few days because even though this is in a sense old news, it gave me time to really think about what this meant. Now, here's the thing. I really was looking forward to making a part 3. There was originally supposed to just be 2 parts to this series, but now there's a 3rd part because of this headline from MSN. Uber CEO tells staff company will cut down on costs, treat hiring as a privilege. Oh, ho, ho. You do not want to hear someone say that it is a privilege to be working from them. You want to know what privilege means to these companies? When they say it's a privilege for you to be working here, that's their way of saying you are expendable. And we are going to do whatever we want because, frankly, we don't care and we do not think that you will do anything about it because you are desperate enough for a job that you will let us do it. You want to know the last time I heard a company tell employees that they were, it was a privilege to work there, it was with Fry's. And I definitely feel comfortable talking about this now because Fry's is officially defunct. Which means, yes, eventually I will be making the video where I tell the whole story about Fry's. However, let's take a little sidestep just so that you know how much this word privilege can be abused by companies. Now, I had just been fired earlier in the year. But later in that year, there was something that came around every year. It was called Black Friday. And whether I was at Fry's or not, they were going to do their Black Friday sale. And of course, Fry's did what Fry's always did with their Black Friday sale. They didn't hire seasonal help. All they did was they worked their employees extra hours, which, hey, in some respects, that was pretty good. It meant overtime and things like that. But Black Friday was always a contentious thing because they would work the employees from like 4 a.m. to 8 p.m. Yeah, they did that, and apparently it was perfectly legal to do that in the state of California. Now, in all fairness, first of all, they kept everyone well fed. They had catering throughout the day, and the food was very good. And the lunch breaks were like an hour long each, so you could go to your car and kind of lay back, lock the door, and sleep for an hour as well. And there were a lot of little breaks so that you could just, be fed throughout the day. So, they did something to, kind of make up for the fact that you were there all day. And of course, the big thing about that day was the check. Oh my gosh, the check. Because near the end of the day, you're not making the $12 an hour. You're making like $30 an hour. It was a very, very nice check. Well, this year that I had been fired, very unjustly, I want to add. Again, we'll tell that story later. But it was also like a year after 2008 and the market had crashed. So basically, work was scarce, people were desperate for work, and Fry's decided they were going to try to take that to their advantage. They were going to use it to their advantage. And people went to work on Black Friday that year. Their, 4 a.m. to 8 p.m. shifts. And then when they were waiting for that big check, they only got paid their base wage. And when people complained, the response was, due to the economic realities of the world, it is a privilege to work at Fry's. Oh, really? Now, obviously, they sued Fry's. And obviously, Fry's settled because they had no leg to stand on. But here's the thing. Whatever they settled for, it was probably less than what they were going to pay them. And they felt like, hey, they can get away with it. And what are these people going to do? Are they going to quit? The job market sucks and they need to feed their families. So they felt pretty confident in doing this. So when you see a company say that it is a privilege to work there, you know you are screwed. Now then, What exactly did Dara Khosrowshahi say about this privilege? Well, let's read this email that he sent, and we are going to break down what he is saying. And listen carefully if you either work for Uber or whether you're a driver, because this actually affects the drivers too. So, Team Uber. After earnings, I spent several days meeting with investors in New York and Boston. It's clear that the market is experiencing a seismic shift and we need to react accordingly. My meetings were super clarifying and I wanted to share some thoughts with you all. With all of you. As you read them, please bear in mind that while investors don't run the company, they do own the company and they've entrusted us with the running it well. Translation: I've been talking to people who have invested money. They are very unhappy at where we are, and they say, you need to start making this company money, or we're going to get rid of you. Continuing, we get to set the strategy and make the decisions, but we need to do so in a way that ultimately serves our shareholders and their long-term interests. Translation: they say jump, we say how high. I wanted to make that one especially clear. 1. In times of uncertainty, investors look for safety. They recognize that we are the scaled leader in our categories, but they don't know how much that's worth. AKA, they want, a stable amount of money coming in, and they want to know that their shares are worth something, and they're not exactly sure how much longer losing money is actually going to help them out. Continuing. Channeling Jerry Maguire, we need to show them the money. Translation: we need to show them the money. That one's actually pretty self-explanatory. Continuing, we have made a ton of progress in terms of profitability, setting a target for $5 billion in adjusted EBITDA in 2024, but the goalposts have changed. Now it's about free cash flow. We can and should get there fast. AKA, they're basically tired of waiting, they want their money sooner, and we have to now adjust accordingly. There will be companies that put their heads in the sand and are slow to pivot. The tough truth is that many of them will not survive. The average employee at Uber is barely over 30, which means you've spent your career in a long and unprecedented bull run. This next period will be different and it will require a different approach. Rest assured, we are not going to put our heads in the sand. We will meet the moment. Now, let's talk about this heads in the sand thing, because here's what's really being said. They're basically saying, or Dara saying, that basically they ignored the reality of the stock market and their business for years. They were expecting to be profitable at a certain point. Who knew if they would actually get there? But hey, as long as we could convince the shareholders that that's the goal, then we can continue on a free ride. Well, the gravy has stopped. The turkey is dry. And we've got to start, showing what we're worth before we get more gravy. And it's not going to be free anymore. So basically, they are saying that they have to take their own heads out of the sand and realize that Uber has to be a business model. Oh, and by the way, some of you have spent your whole lives here. Well, look, we better become profitable or you're not going to have a job. That's what that's saying. Okay, let's go through the second thing. 2, investors finally understand that we are a completely different animal than Lyft and other ride-sharing only platforms. That seems a little naive in the sense that they thought that they were different from Lyft and other ride-sharing only platforms. They're not, but whatever. They are incredibly excited about the pace of our innovation, how quickly we are rebounding, and the huge growth opportunities like hailables and taxi. While they acknowledge that we are winning, they don't yet know the, quote, size of the prize, aka, or translation I should say, we know that you're the best at what you do and you're making the most money, but it's still not profitable, so what's that worth to us? Continuing, their questions run the gamut from, has anyone other than you made money in on-demand transport? Oh my gosh, really? This is what questions, like he's finally saying, oh yeah, they're finally asking, how do you make money? Really? You didn't want to ask this when the company went public? That's just a mini rant. Anyway, to ride sharing has been around for a while. Why isn't anyone else profitable? This is what kind of shows me that investors sometimes aren't that smart, because it's like, well, you're not profitable because you're giving away free rides and you're subsidizing them. That's why you're not profitable. They see how big the TAM is. They just don't understand how that translates into significant profits and free cash flow. We have to show them. And yeah, I actually agree with that. I actually agree. You don't get to be a business if you can't show that you are profitable and you can make money that sustains yourself. Anyway, let's go to 3. Investors are happy with deliveries growth coming out of the pandemic and see that we have performed better than many other pandemic winners. I must admit that it was a bit of a surprise for me because I firmly believe delivery should be growing faster. So the translation is during the call with the investors, it's like, yeah, we see that you're doing better, you're growing, you're still not profitable, and in Dara's mind, they should be profitable. The primary questions were, is delivery a good business and why, and what happens if we enter a recession? We need to answer both these questions with undeniably strong results. Probably true. 4. Investors who ask about freight love freight. However, less than 10% of them asked about it. Freight needs to get even bigger so that investors recognize its value and love it as much as I do. Now, here's the thing. It's interesting that he brings this up because I think the investors are actually kind of saying, hey, why don't you sell the freight division and bring some money in? And Dara disagrees. He believes that freight actually will be profitable. So he's decided that he needs to convince the investors that freight is profitable so that they'll let him keep it around. All right, 5. Oh, oops, let's drag it down just a little bit. 5. Meeting the moment means making trade-offs. This is where it's going to get ugly. The hurdle rate for our investments have gotten higher, and that means that some initiatives that require substantial capital will be slowed. We have to make sure our unit economics work before we go big. The least efficient marketing and incentive will be pulled back. We will treat hiring as a privilege and will be deliberate about when and where we add headcount. We will be even more hardcore about these costs across the board. Now, translation, there may be layoffs coming. Also, there's going to probably be a hiring freeze unless that person can actually add to the bottom line at Uber. But here's the thing. This is the part where you, the driver, are going to be feeling it the most. Because when you pull back, okay, here's the thing. The least efficient marketing incentive spend will be pulled back. And you know what's not very efficient? Are driver bonuses. Now, some of you might be going, well, what are you talking about? I go out and drive all the time to get my driver bonuses. Yes, because it works for you. But what's Uber getting out of it? Yeah, they're getting you on the road, but they're not making any more money on your driving. Heck, they're making less money because they're giving you an incentive. So here's the thing. If Dara is going to start cutting back on hiring and promotions for people at Uber, of course he's going to do it to the drivers. Those bonuses are going to go away. And for those of you who say, oh, well, I'll just go to Lyft when they do it, trust me, Lyft is going to be bringing them to an end too. Lyft is in much worse shape than Uber. 6. We have started to demonstrate the power of the platform, which is a structural advantage that sets us apart. As you know, our strategy here is simple. Bring in consumers on either mobility or delivery, encourage them to try the other, and tie everything together with a compelling membership program. The advantage here is obvious, but we have to show the value of the platform in real dollar terms. We are serving multi-trillion-dollar markets, but market size is irrelevant if it doesn't translate into profit. I am actually amazed he said this. We are serving multi-trillion-dollar markets, but market size is irrelevant if it doesn't translate into profit. Basically, this is Dara Khosrowshahi admitting for the first time that it doesn't matter how many people use our service or how big it grows. If it's not making money, it's worthless. And by the way, this thing about tie everything together with a compelling membership program, he is definitely talking about Uber One. Uber One was the platform where it's like, you're not going to be seeing the apps split out. You're going to see the Postmates app go away. You're going to see the Uber Eats app go away. It's all going to be folded into Uber as Uber One. Because why split up your market like that? If you use Uber for a ride, well, instead of using DoorDash or Grubhub, you might see that, oh, they deliver food as well, so we might as well get dinner through Uber as well. And by the way, that's not a bad idea. That's actually a very good idea. 7, we have to do all of the above while continuing to deliver an outstanding and differentiated experience for consumers and earners. Whether someone is booking rides for a summer trip with friends or a new parent relying on Uber Eats for everything from groceries to dinner to diapers, it's on us to make every interaction excellent. The same goes for anyone who comes to Uber to earn. We responded to the pandemic by becoming earner-centric in a way we'd never been before. We are innovating for earners, thinking deeply about their experience and putting ourselves in their shoes, literally, by driving, delivering, and shopping ourselves. I kind of doubt that, but whatever. Because of hundreds of improvements in this area, people who want to earn flexibly are now coming to Uber first, where they benefit from our scale, diversification, and commitment to treating them with respect. Actually, I think they're coming to you first because when you lose a job, it's super, super easy to be onboarded to Uber. And so what the heck? They might as well, right? I've never been more certain that we will win, but it's going to demand the best of our DNA. Hustle, grit, and category-defining innovation. You know what's really scary about this part? This part sounds a lot like something Travis Kalanick would say. Dara Khosrowshahi was brought in to basically not be Travis Kalanick, but he kind of closed with a Travis Kalanick-like rallying cry. In some places, we'll have to pull back to sprint ahead, aka there's going to be cuts and those bonuses are going away. We will absolutely have to do more with less. And drivers, if you think you're excluded from that, no, you're going to have to do more with less too. This will not be easy, but it will be epic. Remember who we are. We are Uber, a once-in-a-generation company that became a verb and changed the world forever. Let's write the next chapter of our story working together as #OneUber, and let's make it legendary. Go get it! Wah! That is probably one outdated political visual joke, but you see what I'm getting at here. Dara Khosrowshahi is no longer Papa Dara. He has become Travis Kalanick light. You know what? We were growing a little bit more, but now the investors are scared. They don't want to put any more into this, so we have to show that we are profitable or we are going to get burnt to the ground. And that is what he's saying. And look, I do not necessarily disagree with this. You should be profitable. Like, being a company, I think it was bananas, absolutely bananas, that Amazon was able to go on trotting for 20 years before they made any money. That is sending the absolute wrong message. It absolutely is. But people are starting to figure it out. Like, let's pull up Uber's stock real quick. You want to know why this is happening? This is why it is happening. Look at that. Look at that. Look at that. That is, oh my gosh, it just dawned on me. Uber is almost at a 5-year low. It's down $20. How much was it down today? How much was it down this week? Okay, it was up this week. What about this month? Down almost $11 this week. And Lyft, oh, you want to see sad. You want to see sad. Lyft. Less than $20. I mean, how would you like to have invested in the IPO there, right? So, yeah, that's why this is happening. Now, granted, it's because the market itself is bad. You want to see how bad it is. This was my earnings today on this particular day. Like, ooh. And you look back 3 months, ooh. Go back a year, that's ugly. This is what I do to bring myself some cheer. Oh, that's not too bad. Yeah, that's actually really good. So, you know, I just know that this is where things go. Oh, and by the way, the Lyft co-founder on the stock crash, let's see if it'll actually load. I hope it does. This is funny. We don't have to read this article, but on stock crash, we do not like that. Of course you don't like it. You don't like it at all because, of course, you're losing money. So, yeah, reality has weighed in. They can no longer throw money around. They have to start reining things in, and they have to start being profitable. But here's the problem. And, again, we talked about this in the last video. Drivers are getting to the point where they are only driving when there are incentives. But both the companies have to pull back on that. And what is the result? Well, the result is that they are going to lose a lot of drivers. This is from The Guardian. Uber drivers already feeling rising costs of living pain say there will be a mass industry exit if base rates don't increase to sustainable levels. Les Johnson, the secretary of the Rideshare Drivers Association of Australia, said fees and charges had, quote, gone through the roof in recent months, resulting in high driver cancellation rates. Quote, guys are starting to realize if I drive 12 km to pick up a job and it's only a 5-minute trip, they're losing money. Everyone is saying fuel's the big cost. It is, but fees and charges have gone through the roof. Where once you could get into rideshare for $150, now you're looking closer to $800. Drivers are stopping driving. And look, some of you might say like, well, you sure sound familiar, Apptrepreneur. Like, weren't you saying this a few years ago? Wasn't it doom and gloom a few years ago? Yeah, you're right. You can understand why I didn't want to go through another 3 years of talking about this kind of thing. But here's the thing. The chickens have finally come home to roost. Like this letter over here from Dara, I have never seen him write a letter that basically says we have to cut costs, we have to slow down, we have to scale back. He said everything of a company that is basically about to go into survival mode. And you, the drivers, will be caught up in it. And again, if they are going to cut their resources for the, headquarters people, they are going to cut your sources. Heck, how many times do the drivers get screwed when times were great for the company? You think you're not going to get screwed when times are bad for the company? Give me a break. So, yeah, this is bad. This is really bad for everyone involved. And now we're going to have to put officially a countdown clock on this. How many more months until Uber either goes out of business or they are bought out? Because if there is one thing that Uber has an advantage of, it's that they have a name. They have a name people want. They have a name that is recognized. For some reason, it's a name that's also trusted. So I could easily see another company, a GM or something, buying Uber and using the name for whatever they want. Heck, you could see like a Domino's Pizza or something buying Lyft because, hey, they want to deliver their pizzas. There's a shortage of delivery drivers. Buy Lyft, get a discount, and then Lyft becomes the pizza delivery service. Why not? But these companies are going to get bought for their names, not necessarily their assets. Because the biggest disadvantage Uber and Lyft have is that, as they learned years ago, what they do is easily replicated. It just requires a lot of capital to get started, which is why many don't try. And now that capital seems to be drying up. I don't even know if you want to know what's going on with Sunsoft and what happened to their investments with Uber and Lyft. But anyway, that's where we're going to leave this. What do you think about all this? Do you think Uber will go out of business, or do you think they will be bought out? And what is the general timeline you think that will happen? I'd love to know. Comment below. And as always, flame responsibly. Have a good one.